100% sure on that. Um, so we'll see. It'll be fine either way. Okay, send that. Okay, that's out. People could share that or tweet out yourself that you're in here, whichever way you want to go about it. That would be awesome. I just pinned that one up top. All right, I think we're going to go ahead and get started because we are a couple minutes into this. Welcome on in, everybody. If you were in our last place, I hope you enjoyed long-term investing. We'll be doing oil, gas, and energy now. We'll probably run about an hour, maybe hour 15. So props to soFlo for reaching out to me with the idea for this space. So I'm going to turn the floor over to you for the first several minutes to get us started.
I appreciate it, Wolf. First of all, amazing job this week with all these spaces going on. I'm sure you get that a lot, but it truly is changing the game, in my opinion, and it's a great thing to have. So big cheers to that. But I will get started. We're still not at too many viewers at the moment, but let's just get going for everyone that's here. So my background is actually in engineering and finance. Matter of fact, I did live in Qatar for about 12 years. Basically from 2002, that's when I had moved there. I literally witnessed this country, Qatar. I don't know if many of you have heard of it, but I witnessed this country literally go from a pure desert to a Dubai-like city. Basically all due to the investment of energy. Before becoming a full-time trader, I was working as an engineer within the energy industry, focused on turbo machinery. I was actually working with GE in the past. But let's go ahead and dive right into the subject of energy. Obviously, energy is definitely thrown around a lot. I'm sure many of you have been hearing it lately as well, considering what, prices and everything that has been changing. But what is the energy exactly? What are we looking at? Are we talking about oil and gas? Are we talking about renewable energy, power grids? Even oil and gas are technically two different things. But let's talk about the most dominant. The most dominant in this market and the most dominant type of energy in the current market share. To understand really the investment opportunities in energy, it is important to understand some fundamentals as well. So, as you know, when fossil fuels, we've all learned this throughout maybe high school or whenever, but as all fossil fuels are burnt, such as gas, it does produce a significant amount of energy, which is beneficial for power generation and many other uses. But it also emits a lot of carbon. So we're going to circle back to the subject of carbon later on, because I know there's a few traders in here that love that subject. But basically, you might be asking, why aren't we using 100% clean energy? And, as an engineer, believe me, I am all for innovation. I'm all for improving efficiency of our energy industry. But at the end of the day, you cannot ignore the numbers. And at the end of the day, the phone that you're listening to me on right now was probably charged using some sort of fossil fuel. So let's talk about the power generation market in the U.S. specifically. That market share is really broken down into a few categories, and I'll show you why I'm emphasizing oil and gas right now. Over 60% of the electricity in the U.S. alone uses fossil fuels. On top of this, more than half of the homes in America are using gas for heating. And it sucks to say this, but only 19% is for renewable energy. And obviously, that is a space that is still growing and changing. So as of today, we are the world leaders in oil consumption per capita, and we're consuming over 20% of the market share, followed by China. But meanwhile, China is producing more clean energy than we are, which, they're really big in solar as well. So all this information is great, and I just want to say the energy industry can really be simplified in two words, and that is supply and demand. Back in April of 2020, I think, the price was literally pennies. And it's crazy to see that the price of a barrel of crude oil jumped to 90 today. If I'm not mistaken, it jumped to 90 today. And that is just insane. The fact that less than a year or 2 years ago, it was just trading at pennies. And this is the highest it's been since 2014. So do you think that's because everyone is driving a Tesla or what? Obviously not, because at any point, there's a lot of wild cards, but at any point, any country in the OPEC or America or wherever that may be can just dump a bunch of oil into the market with a push of a button. And this affects the imbalance of supply and demand, which is what I really want to focus on today. How do I invest in energy? What does the future hold? What are the opportunities? Obviously, right now, the United States is under pressure to either increase their production or use some of their reserve. It is expected that America will increase its production for the first time in 3 years. And in the past, I just want to put this out as a disclaimer. Like, I've predicted different market rotations into energy, and I'll even eventually, I'll put it up on my page. But with that being said, I don't want to just put out, straightforward extreme predictions on the oil market because I do tend to post my thesis on Twitter and Discord just in public, but as my investing has matured over the years, I stopped pushing that out publicly just because obviously anything could happen in this wild card of an industry. So let's just talk about simple, logical things that you and I can understand. So I think the energy industry is still experiencing some supply issues that will probably carry on to the end of the year. The industry is also in a transition to lower carbon futures. That's something I want you guys to remember, the carbon, just that word, with clean energy. Obviously, right now, I do believe that the price of crude is going to peak, if not right now, but in the near future, we might hit 100. I don't anticipate that we are going to see a steep fall in the price of oil throughout the year. I do anticipate the price of crude will remain pretty high as we deal with these whole supply and demand constraints. Um, Also, actually, as I was reading yesterday, um, the U.S. does want to increase their output, and we're just waiting on OPEC to see if they are going to be increasing their output into March. I believe February they're keeping it as is. Another good indication for the future direction of oil production is the fact that the oil rigs count, which Baker Hughes they usually post it every I forgot how often, but the oil rig count is actually growing. So, what are some ways one could actually invest into oil? Obviously, the energy industry, there's XLE, which is a major index. That the top holdings for XLE is Exxon and Chevron. Then there's battery storage. There's also utility companies like NextEra Energy. And on top of that, this is a big one, in my opinion, is carbon capture. I don't personally believe in investing in an individual company for the reason of most of these products are still under research. But there are indexes that actually trade um, carbon credits. I don't want to dive too deep into that just because of time reasons, but an index that does that is KRBN. And as we can see over the past couple of weeks, KRBN has been running up while the rest of the market has been getting affected. And then solar, a big one to watch in my opinion, is TANS. This is also an ETF based on solar, on the solar industry in America. Just keep in mind a lot of the renewables are still in a lot of developmental phases, which is why I do want to say, use a lot of caution, do your due diligence. I don't want to say buy this, buy that. Obviously, none of this is financial advice, but that is really my take, and I just want to end it there and leave the floor open for anyone else that would love to talk about it. Thank you for hosting this, Wolf.
My pleasure. I think that's some perfect backstory there. It is pretty crazy how much this industry has escalated. Matt, I know that you've been watching it pretty closely too. I wanted to go
Yes,
to you
sir.
next to see if you want to bounce off of where SoFlo was going, talk
Sure.
about some of your experiences, what you watch in this industry.
Excellent. Yeah, let's go for it. And by the way, engineers in the house. So, Flo, I also I'm a chemical engineer. So my background's actually in oil and gas. So I got started. One of my first things I traded outside of when I got into trading was stocks. But when I first got into serious day trading, I got into the oil market very heavily. To fill in what he said, the Baker Hughes rig count, I think, comes out noon Central on Fridays, if I'm not mistaken. And to kind of go with it, right? Oil is trading at about 100, and I've kind of detached from the oil market since I don't trade a lot anymore, but I do still keep up with the trends and understanding why things happen. So hopefully I can shed some experience on what's going on in my oil is definitely trading at $90. We haven't been at $100 a barrel of oil since September of 2014. That was the peak of the shale boom, and the shale boom was this interesting phenomenon where I think it was the end of 2014. We were lifting the export ban at some point during the Obama administration, and so when the export ban got lifted, we can now distribute oil outside of Canada and Mexico, and became a major player on the scene. Well, United States became like the largest exporter of oil globally, I think, for a small period of time, and to kind of combat that at a time, and this goes back in history, why oil rallies. Just to kind of skip before that to 2006 and 7, clearly oil went up to $150 due to two Gulf region wars in major oil producing countries. And so that is historically the reason why oil goes above $100 or goes higher at all. If you adjust for inflation year over year, oil has historically been between $30 and $40 every single year, with the exception of like 3 times in history. And this is about to be the 4th time in history if it gets there. Why is oil rallying now? It kind of comes to have to understand why oil's rallied in the past. Oil is not a growth asset. Oil is a finite asset that never gets more, but never really depletes. If you guys ever know where oil is practically made from, it's not dead, decayed dinosaurs. Most oil is generated inside of the oceans from decaying and dying algae in the ocean. That typically makes its way and seeps its way into the pores of rock. As people who I used to know that were geologists would still find depleted reservoirs somehow mysteriously have oil pop up again. It's because the earth continuously makes it, which is kind of a cool thing. But we're depleting it faster than the earth can make it. So there's, you can kind of see it like a finite supply, even though it is regenerative. So it's not really a growth asset. The demand is growing, and it will outpace the supply. At some point, we'll have to shift to renewable energy like solar power, because oil is used for so many other things like plastic, rubber, polymers, you name it. So we need oil to actually make the stuff we use, not to burn as energy. And so you'll see in the next 100 years, we're going to shift to having most oil being used to make stuff as opposed to make things go. And right now, looking in the past, in the world where oil has, we've had an abundance of it, the reason it rallies is because of supply choking of the cartel, when OPEC had a chokehold on the entire world before we could export to the world, before Russia was a major contender. Um, and right now, we're seeing the effect of that. And historically, the two Gulf region wars, right? Anytime you can block ports or interrupt shipping, I mean, that's what we see right now in the current world we live in with trying to order a PlayStation 5. You can't find something, prices are going to be jacked up on eBay. Well, if they're going to choke off ports in Iraq or Afghanistan, you better believe that the oil market and the futures world is going to go crazy, and spot prices are going to go way up because you're going to assume a boat can't bring oil over here to the States. So that went up. Then what happened was, when you had that kind of relaxation, and the break even point of many of these really bad producers, like, I mean, I'm talking like junk oil in northern Dakota, or sorry, North Dakota, like the Bakken region and such, whereas really it takes like $80-$90 a barrel for them to break even. Well, when oil prices started recovering from that last crash in 2008, what happened was a lot of producers in the United States starting drilling and producing what they called shale oil. And it was kind of like a lower quality crude. But the whole goal was that they knew they were betting on Obama lifting the export ban so that we could ship to China, because there were rumors back in the day. And I remember when I was trading that China was planning a land invasion of Taiwan, and traders were speculating on them needing a whole lot of oil for their strategic reserves. So we were lifting the ban theoretically so that we can make them our major customer, so that we can fuel that war. That was the oil trader speculation in 2013, 2014. And when the cartel got wind of that, they purposefully crashed the oil market to kick us out. It's just such a cool drama. We need to make like a daytime soap opera about this. But really, they crashed the market to kick us out of the space. So that they can capture them as a client. And you know that the Chinese strategic reserves, I don't know if it was doubled in size or what it was, but that was why the rally happened in late 2017. So when oil went from $50 to $75, it's because that's when China was buying. That was the result of that United States, Saudi Arabia kind of oil crash result. And that's where that ended. And oil fell back down to $50. And we sat there really nice until that really fun event with somebody. I won't talk about everything, so maybe someone else can cover it. Remember in April of 2019, oil crashed. It was really fun, and we've been rallying ever since. So why is oil rallying now? We have to think of it, right? There's not a major war. There's not a major like induced supply reduction other than weight. There is, right? That's what we're dealing with around the world globally. Supply reductions in general are causing prices and fears of prices to go up. The same reason it went up in the early 2000s. But it's not something where like it's a militarily induced supply induction, because you don't know how long a campaign will last. But you do know that things are continuously improving on that front as the economy gets better. So if you're gonna if you're gonna be in a country, right, and block their ports, the war could last 10 or 20 years. That's why it went to $150. This, I agree with SoFlo. I think $100 is well overpriced for the current environment we live in. But oil right now is a safe haven against inflation, just like all other commodities are. We saw gold rally right after COVID. Gold rallied and it's been high ever since. We saw lumber prices spike. Any kind of commodity, it's because it's not, because there's a scarcity. People would rather have their money invest in the commodity, not because it will grow, but because it won't shrink. Your dollars are shrinking day by day because of inflation. So people don't want their money to be in cash. They're going to put it in anything that won't inflate. You know what won't inflate? A scarce supply of anything. You go put your money in invest in Nvidia graphics cards right now at double the price. It'll still be double the price in a year, because things that are scarce don't lose their value, and that's why people are actually flooding to oil. It's kind of a hedge against inflation right now, and there's some key factors like because of that the cartel is really brilliant oil traders. They know what to do, and OPEC cut their so spare production capacity is like the quick capacity they can turn around. I think we fell to like 4 million off of 11 million of spare capacity they could produce, which basically just means they're choking the supply and all short-term future supply because they know they can, because they know in these environments they love to squeeze every dollar of oil they can. And so when they do that, it's just to maintain high prices so they can make more money selling the oil. And that's kind of where we are right now. It is a supply issue. Obviously, it's a transportation issue, shipping issue. There may be some short-term effects of the possible Russia, Ukrainian, but if you're an oil trader, and I'm going to tell you this, if you've been trading oil for a long time, pick any moment in time, there's always a threat of a war between two oil producing countries. And there's never a time when two oil producing countries aren't bickering with each other and about to aim guns at each other. So I don't ever consider that to be the reason oil prices rally and sustain a rally. Even Russia, even the United States, it's when you actually have a campaign that also causes sustainably high price spikes. I don't think that is really one of the more moving factors other than a short term, but that's about it. Um, so for me, when you're investing in oil, you have to understand that oil right now is just reflecting the state of inflation. It is a very crowded trade, and as the 10-year yield, for instance, as bond prices decrease, and the 10-year yield flips up, there's a high probability of a correction in the equities market. So people are very nervous to invest in stocks, and they're looking for anywhere to put their money that's not cash. The best place to do it is going to be commodities. So you're going to see a lot of volatility just from that alone. And of course, as we take corrective measures to control inflation, all it's going to do is limit oil's rally to whatever it ends up being. It'll pivot on a dime the minute people start flooding back to equities. So right now, it's a good trade while the market's selling off. We've gone from 70 to almost $90. When the stock market starts to bottom out, the oil market will start to reflect and come the other way as people move money from one to the other.
Perfect.
So, yeah.
Thank you, Matt. SoFlo, did you have a comment there? I saw you unmuted.
Is the space still glitching? I
yeah.
just saw...
So the space is glitching. If you're in here, you're
like I heard Matt the whole entire time, but
I heard him too.
Yeah,
the audience just got disconnected too.
I heard him too.
Is anybody else seeing it? It only shows 6 people in here.
I think we're good, but
yeah. It says 170 people here on my end.
Yeah, it's been saying that though for the whole time. Like it hasn't really changed. And I can't see spaces on my timeline.
I got
DMs. I think it should be good now.
I just got DMs from people saying that they got disconnected.
Yeah, the spaces tab is not showing. Are spaces showing on your guys' timelines besides this one?
Yeah, I don't think it's us. I think it's spaces in general are messed up right now.
Yeah, I'm not seeing any of the spaces that I saw earlier.
Yeah, they're all gone.
I can't. Yeah, I can't see any listeners now either. It just cut down to 6 people.
Yep, there's not anybody in here. It's just us.
Hey guys, how's it going?
How's your day?
What's up, Juicy? What's up, Stock?
What's up?
I'm sure you're
Don't go up.
I'm sure you're all.
Yeah, that was.
It's literally just us, like sitting here talking to each other.
Yeah, whatever. This is cool. Anyways.
I'm
Like a
sure you're all
boardroom
wondering
meeting.
why I brought you here
God.
today. Yeah, Alan.
God, you have to screenshot this dude and post it. Be like, sick turnout today. People love
This
oil.
guy-
Oh, now some people are coming
I
back.
see
We just
one.
got 2 more
Yeah.
people.
Okay, maybe Spaces got the reboot.
We had 200 people till Matt started talking, and now there's only 6 people left.
Yo,
I don't know if
Matt.
you guys watch Succession,
Okay.
but this reminds me of
Oh,
that scene
finally, dude! I was
in
trying to unmute
Succession
my
where they're
mic.
having a boardroom meeting and they won't let them in.
Okay, it looks like it's back. By the way, I've been having a ton of Spaces glitch. The weirdest glitch is it keeps showing on my timeline. Past Spaces that I've been in still show up, like at the top of my timeline.
Yeah, I've been seeing that. That's weird.
There's
So-
9 people in here.
Well, it's filling back up. It looks like it's letting listeners back in.
Dude,
I
it's
mean,
got to
okay,
be
wait,
time to short Twitter. If not now, then when?
Yeah, if not now, then when? Yo,
I'm
somebody
telling
actually.
you, watch this. I'm gonna kick all of you guys and invite you back up, and then we'll send out a notification to a bunch of people. I think that will. I'm telling you. Listen. If we want to,
I'll-
if it won't work anyway, we might as well just restart it. But
Yeah.
it is a good strategy.
Well,
I'll repeat because I took some pretty good notes, but I'll repeat and we can
I
start.
think
over
it's
if y'all want
working
to.
fine.
Oh! I just saw a lot of people come back in.
Yeah,
We're
people
coming
are
back.
trickling in. I would just I'm gonna retweet the tweet that I put out originally and just let people know we had some glitches, but we're working now.
Okay, well, you should bring up some random speakers and find out at which part I cut out, and I can just kind of start over from that point. That way, I don't have to go all the way over unless y'all want me to go all the way over from the beginning.
So basically, whoever paid attention, raise their hand up and bring them up.
Yeah. If you were taking notes in the audience, I feel like they got most of what you were talking about, though, Matt.
Okay.
I heard it all, but we were up here, so maybe
Yeah,
we
we're
didn't
basically
get
in
the
a
full
Zoom.
thing of it.
Yeah, but I saw people in here until the end of when Matt was speaking. Then it hit with that weird glitch. But looks like people are coming back in. So, Matt, if you want to do like a minute recap, perhaps,
Yeah,
towards
okay.
like on like the latter part, and then we'll keep it rolling.
Yeah. Okay. Good deal. Let's see. People coming back in. Okay. Cool. So the minute recap is that oil's not really a growth asset. There's a finite-ish supply. We're not really going to see oil grow in a way that a stock would grow. Oil right now is a hedge against inflation, and the fact that the odds of a correction equities market are very high. This isn't necessarily a fundamental play on the long-term growth in oil. This is just a safe haven to have your dollar be somewhere where it's not cash. People are not expecting the dollar to grow in oil. People are expecting their dollar not to shrink in cash. And oil in other commodities like gold and other um, lumber had this for a little tiny bit. I mean, you see commodities are becoming places people are just putting their money in to avoid it um, being in cash. And so that's really the major reason oil has been moving beyond $60. And it's just a reflection of inflation. And that's kind of what we're doing. We have when you have environments like that, historically, the cartel will choke the supply or choke production to further create panic. They love to jack the price of oil up around the world because they love to make money. And this is kind of part of what we're dealing with. And the spare capacity is down from 11 to like 4 million barrels a day, which is their short-term capacity extension they can draw on to get oil out. So they're not in any hurry to aggressively increase production. This is something they've always done. I remember it always being that way to have that part of the battle. So I don't think oil 120, 150, that would be very abnormal. $100 is very abnormal. If we have a really big period of inflation, like if the Fed wasn't raising interest rates, then oil could go beyond 100, 120, 130. But the fact that we're going to have some very aggressive rate hikes from the Fed, all that's just stating is that oil is no longer a safer haven against inflation. The general equities market can be, because when you raise rates in a bull market, yes, you create volatility like now, but ultimately equities markets will stabilize and money will leave these overinflated commodities and redistribute through equities. So I think it's a short-term rally. I think $100 and it may stay there for a year and bounce between 70 and $100 and hang there for a year. But ultimately, when all's said and done, in a corrective oil market will return to 40 and $50 at some point in our lifetime and probably stay there until the next big recession or next big war. So
Okay, perfect. Thank you for the recap there, Matt. All right, looks like we're back to strength. We've got over 100 people in here. Thanks anybody that joined back. Don't know what that glitch was, but yeah, if not now, then when? If you started shorting Twitter from when we told you to, you're probably up about 30%. So we'll see what happens. But some big money came in yesterday, so watch out. Some people are buying calls, and it's up like 2.5% today. Okay, Stock Talk Weekly. Would love to hear, where you've been investing in this industry, if you have been, and what opportunities you lean towards within it.
Yeah, for me, I just trade oil based off oil prices. I mean, when I see Brent surging, or if I see geopolitical tensions, or generally in climates where I feel like the price of oil is going to be driven up, then I look to trade them. And there's a variety of ways you can do that. One stock that I've had a good history of trading, at least, is OIS, which is Oil States International. It's a tiny company. It's a $400 million company, but the stock tends to move very aggressively when oil prices are surging, and tends to dump when they're not. So you have to be nimble to trade it. But OIS and REI are two penny stocks I like trading in response to oil prices. And then I also trade PSCE, which is the small cap energy ETF too. So there's a variety of ways to get exposure to it, but I don't typically invest in the industry. It's not like something that I have a lot of interest in doing for over the long term. But I mean, I do think that despite all the renewable energy themes that are emerging, and solar and battery technologies that are emerging globally, I think there's still a couple of decades of oil dominance left, at least, if not longer. So they're still going to be relevant, these stocks for a long time. It's just a matter of thematic investing and trend investing versus, investing in the price of oil, which is just in front of you. And you can do that on a short-term basis, I think, effectively. But, buying and holding these stocks over the long term, I'm not sure how good the returns will be over the next few years, or over the next decade. So from an investing standpoint, I'm not as interested in the industry, but I do think that there's a lot of opportunities to trade the sector when oil prices are surging. And with all the geopolitical tensions we have now, this is a good climate, I think, to be involved in them for sure.
Perfect. Are there any specific ones that are more constant on your radar? Any specific tickers?
No, not really. I mean, I just go, like I said, if I want to just trade the high beta, then I'll trade stocks like OIS, REI. Oxy has been one as well that has been a good trade lately, which is Occidental Petroleum. That stock has been moving nicely in reaction to oil prices as well. It's up, I think, 23%, 24% in the last month. So it's definitely outperforming the broader market, and a lot of these oil stocks are. And in an environment where we have inflationary concerns and geopolitical concerns, you can get oil prices to surge. If Russia were to invade Ukraine, you could see oil at 115, 120 a barrel quickly. So in climates like that, I think there's definitely a trade to be made. But there's no specific favorite tickers I have necessarily. Like I said, I like Oxy, I like trading OIS, I like trading REI, I like trading the ETFs every once in a while. But yeah, there's not a particular stock that I want to be quote unquote invested in. I trade XOM options sometimes as well, but yeah, no, there's no quote unquote favorites I have in this sector.
Okay, awesome. Thank you, Stock Talk. What's up, SoFlo?
Yeah, I wanted to agree with Stock Talk on the fact where, well, two things. Number one, investing in oil isn't like buying Apple. It's not like one of those things that it stays going up for the next 5 years, whatever. It's one of those things where, hey, there's a play to be made. The play might be 1 to 2 years, and if you're in it right, then you can benefit. Like for example, you mentioned Oxy. I remember whenever that COVID crash came, I just bought a whole lot of Oxy with like an average fill of $12 because I'm like, you know what, our energy isn't where it needs to be. Eventually, it'll recover, right? Um, but then again, when we're talking about like innovation, renewable energies as well, I do think it's still a very young market and our technology is still not advanced to that extent. And yes, it's going to be relevant for a few years, which is why I think, like, yes, if you're bullish on renewables, but you don't want to hold through all the, turbulence, or let's say a company ends up completely failing, another way to look at it is like carbon capture, because since oil will be relevant, that means we will continue to have carbon, which means we need to reduce our carbon, right? So that's kind of how I look at it. Like, it's kind of like just a simple equation. Um, as far as carbon capture goes, like in the EU, for example, every company is allocated like a certain amount of carbon credits, right? So basically, whenever they pass these carbon credits, they can buy more because they need to pollute more. I don't want to like say it like that, but that's kind of the whole concept of it. It's the concept is there to limit carbon, which is why indexes like KRBN, they're based off of future carbon contracts. That's why that index has been surging over the past year. It even beat the whole energy industry as a whole. So that's where personally, that's what I looked at the past year. That's where I'm still interested in, while I keep a very strong eye on renewables. I don't have my money in it, but I have a very strong eye on it. That's pretty much where I stand with that. So that was a good point, Stock Talk.
Perfect. Thank you, soFlo. Okay, Juicy, I want to get you involved with this. I know you're coming at this from more of a technical perspective, but could you run through some of the charts in the gas, oil, energy industries that perhaps are appealing to you, or if they're not, maybe point out what stands out to you.
Yeah. So for me, I had a theory energy was going to run. So after, and again, guys, thanks for having me on. But after having such a big year in tech, so what a lot of traders don't do, they solely focus on these smaller time frames, which is cool, right? The dailies and down. At the end of the year, there's something called a yearly chart. You should be looking at these yearly charts as well. If you look at any of these yearly charts, looking at sector wise, I like at the end of the year, I like to see what sectors perform, what sectors look crazy, what sectors underperform, where the setup's at on the yearly chart. So if you look at the XLK, which is pretty much the tech straight up, XLV straight up. But if you looked at XLE, we went inside. And the minute we went inside up on the yearly chart, it was off to the races. So that's why a lot of my trades this year, on the day trading perspective, because it was just theory, have been XOM, EOG. I had some CVX and a little bit of oxys here and there. I'm still kicking myself in the head for not just opening swings and sitting in them. But the theory is that we go on XLE to 69.47, and then if we can take that out, XLE from a yearly perspective has room all the way to 79.26. So I'm still pretty much bullish on the energy sector alone. Some names that I like. The only problem with some of these names I'm about to go over, first one's going to be ticker XOM. If you take XOM on the daily perspective, you have something what's known as a megaphone pattern. People who trade the strat, they call it a broadening formation. You're pretty much, which is all that is a series of higher highs and lower lows, and you draw like a megaphone pattern around it. It's kind of opposite of a wedge in a way. Point of matter is you're sitting right at it after this explosive move from that break of that 62.40, right? So if you can get through this broadening formation, which would be around the 76.54, I got a fib extension around the 85 area of where we can project to go, which is just a little bit over the yearly target. I mean, which would in line with XLE's yearly target. I'm also liking ticker DVN. Let me pull this back up because I had this all written down. But DVN, same thing, broadening formation, straight move to the upside. We're pulling back from the top of that broadening formation. We're going outside down. So as long as we can stay above the 9 here, I like this as well. But the point of the matter is everything in the energy sector moves as a sector. So majority of these names are going to have the exact same chart going on. So if you look at CVX, look at XOM, they're going to pretty much have the exact same patterns going on. So just to classify and bring them down, I pretty much like all the names in the sector because we're moving as a sector. I think that we're going to consolidate and then continue to that 76.24 area. Me personally, with oil, back in the day, I used to trade crude futures when I first started day trading. I did okay there. Then I just transitioned over. I don't really mess with any oil stocks. I used to play with USO a bit here, but USO pretty much has the same thing going on. Took off with energy and hitting the top of a resistance area here. So we can get above the 63 area. You can fib this out for a move up to the 66. But besides that, yeah, that's pretty much it for me.
Perfect. Really good stuff there with these different charts in different areas. Is there anything that you can point out regarding seasonality when it comes to some of these sectors?
Man, you know what? I didn't. Give me a second. Pull up on TradeZ. Give me 2 seconds.
No problem. And you're checking seasonality on, what do you check it on, TrendSpider?
Yeah, I use TrendSpider. And
did you see they added unusual options this morning?
No, I didn't see that. No. I heard I was in a meeting where they was going to put it there, but
it's in the sidebar.
Oh shit, yeah. That's why I like TrendSpider, man. Like when you get a bunch of traders together, like they just sit around and say, "Hey, look, how can I make this thing better?" Right? So XLE, I like to do seasonality over a course of 10 years. All right, so about 10 years from now, that's going to be 2012. So we go week of the year. This week is actually low, but since we're looking at a long term, let's look at the yearly. Seasonality is still kind of flat. You don't really see, especially recently over the last couple years, you haven't really seen a lot of movement to the upside in energy till now. There was a whole year of consolidation. We're breaking out that consolidation. We should go higher from the break of that consolidation. So I would expect seasonality to be lower, but seasonality just gives like a North Star, kind of like a guide. It charts over everything for me, right? So if I got the breakout on energy and seasonality is like somewhat iffy, I'm shooting 50% on a yearly seasonality for XLE, I'm still going to take the energy trades longer. You get what I'm saying?
100%. Perfect. Okay, so I like where we're going. I think we've thrown out a lot of names that are within the sector. For anybody that's listening to us and saying, what are some of the stocks within the sector? What I recommend you do is you go to finviz.com. So that's finviz.com, and then you click on their maps page. And once you go into their maps page, you'll be able to see the industries broken out. And if you go, you'll see there is a energy sector that is there. So that shows oil and gas, and some of the names that are within there. We've mentioned some of them, but like Oxy's in there, EOG, COP. Then you'll have, the oil and gas integrated, which is like XOM, as well as CVX, which is Chevron. And then there's just other names down there. There's services, there's refining and marketing. So you got Marathon, Phillips and Valero and others. So this is kind of where I would recommend to go. But we're talking about how we do like these charts. Obviously, a lot of those charts are going to follow a similar setup. And when you're looking at something, let's say an XOM, right, which is the largest weighting right now in XLE, which is the Spider Energy Fund, you'll notice that pattern of how it is coming back towards, it's kind of reclaiming the 2019 area that it was in. I guess it's kind of coming back up towards that. I would go on the weekly chart. You could see it really nicely broke back through the 200-day on the weekly, and then kind of just powered straight up from there, but still has room to run. Still is not even near those highs of 105-ish that we saw back in 2014. But it's something that you have to keep an eye on from multiple perspectives, both the technical and as well as the macroeconomic environment, which we talked about. Okay, Joey, you want to weigh in on this?
Yeah, would love to. So, the energy sector, just some general thoughts, has really underperformed for quite a while. But this past year, as a lot of people know, it really has had its time to shine. So, in the past 10 years, energy is the worst performing sector of all the S&P 500 sectors, and it only had a 1.3% return over that time. However, this past year, it surged over 53%. So, with that said, it is good to take a look at XLE, which you did mention briefly. So, just a bit more context there with XLE. It has the largest U.S. oil and gas companies, a couple of them being Exxon and Chevron, and those each have over 20% of the ETF. So, given the current climate right now, oil and gas stocks can act as a nice hedge against some geopolitical issues. So, notably, a lot of people are familiar now with a lot of tension surrounding everything going on with Ukraine, and that's pushing a lot of equities down. On the other hand, that concern is increasing commodity valuations there. So oil and gas, as well as the equities related to oil and gas companies, are doing pretty well. And oil prices have also been doing really well as of late, with 5 straight weekly gains. And both WTI and Brent have hit their highest prices in around 7 years, going back to 2014. And also, a lot of major banks stay bullish, with Morgan Stanley and Goldman forecasting for prices of over $100 for oil, and Bank of America is even more bullish, forecasting over $120 by this summer. So, with that said, energy, they're not a sexy sector like a tech or like a clean energy. A lot of people love the hype around clean energy, but as some of the speakers mentioned before, at this point the technology isn't fully there. And whether you like it or not, people are heavily reliant still on oil and gas. And I think that energy can be a nice play. So I'm typically a long-term investor, but I do get into XLE and a handful of individual names when the climate is right. So as some of the speakers were saying before, XLE and individual names, they're not necessarily a buy and hold forever. But as the climate, continues to change here and fluctuate, when the time is right, you can definitely make some good plays with the energy sector.
Perfect. So, Joey, your favorite names in here are, you're kind of just rolling with XLE?
Yeah, typically XLE, but I do typically play some of the bigger names. So Exxon, Chevron are a couple of the ones I like the most. I don't play with the smaller ones that often.
Okay, perfect. Thank you, Joey. All right, so everybody has had initial moment to go except for stock market news. Stock market news, do you want to weigh in on this?
Yeah, I'll come in briefly. I am energy sector. I definitely know my circle of confidence and know where I'm good at and what type of sectors when I want exposure to it. I will go for that ETF area, for example, the XLE, as opposed to going and try and pick individual stocks. For me, energy is definitely that area where I will try and play a moment, a moment in time, a year, a trade or whatever through an ETF. But news-wise, I'm the news guy. I know. Chevron has earnings tomorrow, actually, before the markets open. Wall Street's expecting EPS of $3.13, up from EPS of -1 last year. So you can see the huge growth there. And revenue is expected to come in at $45.22 billion, which is up 79% year over year. So you can definitely see why this sector is heating up right now, and people are getting behind it in the trade. But yeah, also I saw Exxon, they declared a quarterly dividend of, I think it was 88 cents, which was unchanged from their previous dividend yesterday. I will keep it there, keep it brief. Excited to learn more in this space. Actually, wait, gonna butt in one more thing. I always do this. Make sure you're following all the speakers up here. This is a fantastic panel. And truthfully, not the typical type of spaces you're going to see on here. And I love being a part of these where we're talking about different sectors and different parts of the market, bringing in audiences, engaging and showing our audiences new and different parts of the market. There's a lot of different ways to invest, a lot of different areas to invest. And, a lot of the times when the market is sinking as it has been, energy is sometimes the stocks and part of the market that can hold up well. So it's always good to be exposed to stuff, know what you're doing, and learning. So check out the people up here. Shout out to soFlo for having the idea for the spaces. Big shout out to Wolf for putting it together. Make sure you're following him. And yeah, thank you.
Absolutely. Taking a look a little bit further into the industry. So obviously a lot of people have mentioned XOM. So I'm right now just taking a peek at insider purchasing on XOM just to see if there's anything that stands out for the insiders. So if we go with all insiders, looks like the most recent was about 3 weeks ago reported. They did actually buy, or oh, that wasn't a purchase. That was an award. So they were awarded 25,000 shares. But so the last movement that actually was made was selling. So if you go back about 6 weeks ago and 7 weeks ago, insiders disposed of about 40,000 shares. And they've kind of been awarded shares a few times. And then the last time that they went and bought actually for insiders was 12 weeks ago. That was on XOM, kind of that more major one. And then just looking at some of the options activity as well on it, we do have a lot of short dated, and by short dated, I'm going to put that as, let's say within kind of like 5 months here, because a majority of it's kind of coming in March, April, and May. There is a lot of unusual options activity, specifically bullish call action. There's some people that are going pretty hard into the money towards the 50s, but you'll also see a little bit towards the 80s, towards 75, right around where it is now. There's actually a decent amount of premium that's come in on that Exxon area. And then I'm just going to take a look at XLE real quick. So that is more of the overall fund. Again, a pretty great looking chart. I mean, if you're just looking at it, over the last 6 months, especially, where it's above all key moving averages, above its anchor VWAP, even year to date, everything that's going on there. So taking a look at XLE, yeah, I mean, some of the largest premium that I'm seeing is bullish. There is almost $1 million of bullish call premium that is sitting right now for actually February 18th in $66 calls. So those are in the money, and somebody came in. That's $886,000 of premium on that. There is some bearish that came in more towards, but nothing even close to it in size, honestly. I guess there's bearish of about $570,000 of premium. Those are $63 puts. Those are for March. So you do have some pretty decent heavy action on both sides of XLE there, with things that are going on. Obviously, you're not going to have any insider type stuff around that. Okay, Matt, we've been kind of covering a bunch more topics since. Was there anything that you've heard that you wanted to chime back in on?
In general, yeah. By the way, thanks for having me, guys, and of course, follow everybody here. There's such a cool panel of people with such like a broad amount of information that I love learning from everybody's technical perspectives and all the different things that are shared. So many different angles that are taken here. It's really nice. So, is there anything else I've learned? I guess in a sense, can you kind of I guess maybe rephrase the question?
Oh, no. Just like we've kind of covered this from now technicals. We've heard
Ah,
insight from a couple different areas. Perhaps if you wanted to talk about hedging pressure or anything like that, that's kind of hitting
oh,
the industry.
yeah, actually, that's a good thing. Give me 2 seconds because I actually did not do this today. So what we look for, right? Part of our model, we have an algorithmic model with we're making a trading platform versus management. Small shameless plug on that, but in all honesty, the idea that we have a model that looks at outstanding options positions held by market makers and in different assets. So we're looking like the USO for oil. We can see that there's a clear bull or bear split between the risk that's distributed in here. And today, oil actually, surprisingly, um, above 62, it's bullish, and below 61, it's bearish. So we've actually kind of trading in between. I'll actually post a chart up once I run this. So as far as the distribution of risk goes, oil is smack in the middle today, neither bullish nor bearish, and it's kind of doing what's expected behavior. As far as hedge pressure goes, this is kind of what we look at for gamma squeezing on sold options to go in the money. It's kind of our bread and butter calculation. 61.5 is the hedge pressure for the USO, which of course we look for that to correlate with the oil price itself. USO is the largest commodity pool, I think, period, of all commodity pools. It's certainly the largest commodity pool for oil. Um, and it has a 61.5. It is smack in the middle and sitting on hedge pressure. It literally is as balanced can get for at least today's day trading. The monthlies, which we look for and forecast the month out to February 18th, is that hedging is certainly on gamma positive from 58.5. So oil's still maintaining the course, neither bullish nor bearish today, but certainly not bearish a month out either. So that's kind of supporting, I think, a lot of the people today that said oil looks good. It doesn't look bad. It doesn't look like it wants to reverse, and it looks like the positional data does support that. So the type of analysis, when Gav asked me for the charts, you guys may be familiar with technical or fundamental analysis. We do something called positional risk analysis. It's a different type of analysis that kind of goes hand in hand with the other three. So this is where people are positioned. Um, and this is where algorithms are hedging against sold positions. So it's automated trading robots and options that are sitting in there in the space. So we pair that with the technicals, like Juicy, the fundamentals that Joe, soFlo, Stock Talk, and Evan brought up. All of it together, and now you see where the bears and bulls are positioned. You get a very clean picture overall that's supporting what my colleagues here have also said. The oil is not bearish. Oil is maintaining the course. Oil's nice and hedge positive for the long term, and we're probably going to stay in the 60s through the rest of the month. Absolutely.
Perfect. Thank you, Matt. Okay, SoFlo, I think we've covered this from a lot of different angles. Wanted to bring it back to you, see if there's any other areas that you think we should be touching on.
We definitely touched up on a lot of things. I appreciate everyone up here for sure. You guys had a lot of good insight for sure. So one thing as well that I wanted to add, we mentioned seasonality earlier, and this is without a doubt more of a seasonal type trade in my opinion. If you're just looking at trading, you don't care much about the fundamentals. You can see that over the 10 years, like I think it was Joe had said, it didn't outperform the market, and it really only outperforms when it runs. And the truth is, it could be asleep for a little while, and then suddenly, 1 year just starts rallying. So I think that's one thing to just, be aware of slash be careful for, because the past year it has been rallying. So, and another thing that Matt actually just touched up on is the fact that the money really hasn't been leaving the industry. So that's really interesting to see, the fact that money is still staying in it and it's not selling off is something interesting to note. I'm sure there are trades to be made. I'm sure there are investments to be made. But of course, due diligence is your number one friend. And yeah, I appreciate it, Wolf. I appreciate everyone up here. Some great speakers, that's for sure.
Perfect. Okay, then I think we can roll into a bit of wrap up. We are going to have more spaces today. One more time, if anybody wasn't in our last space to catch this, we do have a very simple way to find our spaces. Either you can go to my pinned tweet, or you can join our free public Google Calendar, and all you have to do to get on that is just DM me your Gmail, join 3,000 plus other investors following every space that we do. Okay, big shout out to my co-hosts as well as my speakers. Let's move into a little bit of wrap up and closing remarks. Stock Talk, do you want to go first?
Sorry, my mic was good. Yeah, I mean, this is just another one of those theme-based things. If you need to look for exposures in a market like this, then you have to be able to be nimble and involve yourself in sectors that you might otherwise trade. Things like oil and financials are quote unquote boring, and a lot of retail doesn't give them their due because of that, because they're not companies that people want to own over the long term. But in reality, if oil prices are going to go up, and if we continue to have geopolitical tensions, continue to have inflationary pressures, oil prices are going to go up. And in that meanwhile, oil stocks will follow. And so if you want to be in a theme that's tradable, especially on the upside, which in a market like this, a lot of stuff is not tradable on the upside, then I think oil is definitely one of those industries. I think energy and financials going into the middle of this year, potentially even later into this year. Energy and financials to me are the two sectors that have the ability to outperform. Any other tech growth sectors that you're used to are most likely going to continue to see compression, and at a certain point they'll bottom out. But calling that bottom is the crux of the market, right? Like that's the hard part. And so in the meanwhile, if you want to find sectors that you're capable of playing on the upside, I think oil is one of them, and I think energy is another. And so, and financials are another. So, be nimble and stay open to these things. And if you're not aware of different tickers to trade in these sectors, then do the work. But there's always an exposure, small caps, mid caps, large caps, ETFs in both energy and financials that you can play. So find an exposure that works for you, study the chart, learn the chart, look to play it on bounces when oil is strong, and look to short them when it's not. And if you play both sides of the ball like that, just like, I've been doing with Bitcoin miners, it works really well. You can play the bounces, play the rejections, and play the momentum in these. And that'll at least give you something to trade in the meanwhile while you're waiting for growth in tech and these other sectors to bottom out, and begin reversals. But in the meanwhile, stay nimble and keep your mind open to trading some of these sectors that you might view as boring or might not normally be interested in.
Definitely. Yeah. One day growth will stop this massive sell off, but today is not that day. So absolutely, you got to stay on alert. Okay, Juicy, any closing thoughts?
Man, just keep it tight, man. We're in a really volatile market as a whole. If you take a look at QQQ or SPY, you see hammer up, we go inside, then we went outside down, then we're inside. So, volatility is definitely here, definitely going to stay. Sector-wise, XLE is pretty much right now, from a shorter term perspective, meaning looking at a day chart, I'm looking for some consolidation to happen, especially after that nice monster move up. And if we can break that consolidation up on XLE, we pretty much got room to the 7650 area. So I'll be looking at names like XOM, EOG, CVX, DVN for continuation. But that's it. I'm going to keep it short and sweet. Be sure to follow everybody on the panel section here. And big shout outs to Wolf for always putting up these clean and nice spaces that can help everybody grow. So I'm out. Have a good one, everybody.
Pleasure having you on, man. See you in a couple of hours. Okay, let's keep it going. SoFlo, any closing thoughts?
Basically, look at the fundamentals, make sure everything's there. If you love renewables, do your research. I personally don't name pick individual renewables. I look at the indexes as a whole, just like Juicy said, it moves as an industry. And definitely keep it tight. So besides that, I think we did cover a lot of things. And if anyone ever has any questions about it, feel free to DM me. I'm sure that some of the speakers will reply as well. I do appreciate you guys for having me up here, and I'm super excited, to answer more questions. Take care, guys.
Perfect. Thank you. Take care, SoFlo. Okay, Matt, any closing thoughts?
This is actually a great space. I kind of like how every once in a while on the schedule you throw in something really fun. It challenges me, which is kind of a good exercise even as a trader. It challenged me to dig back into things I've learned and also be open to learning new things, especially when it comes to something crazy like oil or energy prices. Highly unpredictable, very easy for a price to be manipulated, and so many thousands of instant hammer hit catalysts that can cause it to explode in any direction, up or down, on a moment's notice. And there's so many dynamics to it. When you guys are trading oil, my closing thought, if you're trading a commodity, right, a lot of times you think of a stock, and stocks go up in price. And why do stocks go up in price? And the company improves its sales. Well, humans make more babies, we have more people. Productivity grows because population grows, and people make more because we consume more. And stocks have always gone up in that aspect, or indices have always gone up in that aspect because the stocks in them have always gone up. Now, commodities don't always go up. You can't trade them like a stock. Your technicals almost always will break down the moments as catalysts happen. My advice for people that are trying to day trade or swing trade is don't try to guess what these catalysts are going to do. Oil has the API report. It's a private industry, or it's a private group of people, industry professionals that get together and survey and tabulate and reveal the inventories. And then you have the EIA report the next morning, which is a government institution, which is you see a private and government both reporting. Those numbers, you may think, well, there's a build, so oil must be bearish. There's a draw, oil must be bullish. But those numbers are reported inventories that are a week late. So if you understand the mechanics of how oil is traded, you can't treat it like a stock. You can't treat a catalyst like a short-term thing. It's a delayed signal by a week. As a matter of fact, something called spot prices. I'm going to a whole nother topic about that. But if you are an oil company and the pipeline busted, you need oil shipped, you're going to call somebody called an oil broker and say, hey, I need a tanker of oil today. He's going to call his buddies out there and find out who's parked in the Gulf with a tanker. He's going to make a deal, and you guys are going to argue on the phone and come up with the price, and they'll deliver the oil to you. That's really how oil is traded. And futures is trying to guess that price. So that price is dependent on supply, demand, emergencies, problems, whatever. That trader will know in real time the available inventory. It's called spot price. There are spot price data feeds that give you the actual spot transaction, like Platts. It gets you ahead of the curve a little bit. If you're a serious trader, you need to understand how spot prices work, because futures trades will predict that. Oh, this guy's an emergency. He's in a shortage and he's emergency going to buy the oil, and oil futures are trading at 62. He's willing to pay 65. That means he wants the oil now. And what are futures going to do? Trade up to 65. That's the real mechanic of what causes oil prices to move, those instantaneous supply and demand changes. So you can't buy oil or anything thinking that it's like a stock and that it's going to grow or go up and down. Commodities do not trade like stocks whatsoever. They're very susceptible to very near-term catalysts, very instantaneous needs of people that are contractually obliged to produce oil. They can't be out of deviation in their contract. It's more expensive them to deviate to their downstream customer than it is for them to pay $3 extra a barrel, so they'll do it. Those are the mechanics that cause oil to rise, not technicals, not all that stuff. And so they will work when there's no catalysts, like anything else. But anytime you have catalysts, you have to kind of assume that all technicals, fundamentals, even positions, these things go out the door. And commodities have many more catalysts than stocks do. Like an earnings report's a catalyst, interest rate hike catalyst, a couple times a quarter maybe. Oil, like literally twice a week, there's catalysts for like. So you have to be very careful trying to trade these things and day trading them on those news reports. You just have to know that those inventory reports are delayed. They're reflected in the spot price a week ahead of time. So you're using delayed signals. They will never predict where the market will go.
Perfect. Thank you, sir. Joey?
Yeah, so just first off, I know that Finchwood tends to love the so-called sexy growth stocks, but I feel you are doing yourself a disservice if you stay closed-minded and don't explore other areas. So I think this was a great space, and given the recent, correction, I think it's a great opportunity to check out energy. And in this current climate, energy is a very tradable and investable area. So with that said, definitely, urge everyone to do some due diligence and check out the area and see if there are things in energy that interest you. And with that said, just want to thank all the speakers for being up here and putting out a ton of great information, as well as the three great co-hosts, Wolf, Stock Talk, and Stock Market News. They're consistently putting on the best spaces in all of Finchwood. So whether you're in the stocks, trading, long-term investing, crypto, NFTs, whatever it is, these are the guys to check out. So do yourself a favor, be sure to give them all a follow and stay up to date with all the best spaces on Finchwood. So with that said, thanks again for having me up here.
Absolutely appreciate you, Joey. Everyone, make sure you're checking out what Joey is doing. Huge part of the Wolf team, and excited to keep things rolling. Okay, my awesome big shout out again to Bullish Rippers. If anyone missed it, we did a full long-term investing space this morning for about 2 hours with Bullish Rippers. You can catch the replay on the Bullish Rippers page. Very, very good account to be following. I'll be doing more spaces on there next week as well. Did a couple spaces from there this week. Okay, stock market news. My wonderful co-host. Any closing remarks?
Yeah, big shout out to Bullish Rippers, the Green Raccoon up here. I am a big fan of that account, also in bias because I do tweet from it. So, there's that. Big shout out also to soFlo for coming up with this idea. A lot of the times we're out here grinding, trying to put together these spaces. So we love it when really smart people come to us with a good idea and a good conversation we can really rally around. So big shout out to soFlo Trading. Great conversation had here. Definitely a fantastic space. Check them out. Big shout out to all the other speakers who came in here and made it a fantastic space. Around that, we really value all their free information that they're able to give to us. If they're able to just get Matt, did you just say this that this is kind of different than we normally think? Sorry, this is a different sector than we normally think about, than we normally invest in. And these people are able to come up here and just really spit information and give it to you and have such great knowledge. Their profiles, their pages are going to just be that much better when they're able to think out what they're going to say and really put it out into the world. So I encourage you to click into all their profiles and check them out. They're putting out some really fantastic things. Big shout out to Wolf Financial for always putting on top class spaces. Big shout out to my speaking errors about 5 seconds ago, and I'm going to cut myself off there. Thank you, everyone, and I am excited to see you guys soon.
Perfect. Yeah, this was pretty cool, switching it up with something that was a bit of a different topic. We actually are switching it up again in less than an hour. So as soon as this space is done, this space is being recorded. Some people have asked me in the DMs. You can go to my page. I'll share the recording out. Easy to listen to on Twitter. Number two, we're going to have investing in IPOs and SPACs at 4 p.m. I'm interested to see a diversity of opinion in that one. So definitely show up. Maybe we'll take some thoughts from the audience. We're going to talk about any IPOs that we're excited for. I think we're also going to recap from the past couple of years what the change has been, because we've had years where IPOs were the hottest thing, right? You needed to get in. Now we've gone through a period where that has significantly decreased. And what's next to come, who knows? But we'll be definitely discussing it. Thank you again.